for Business. Let's say hello to Marcus Carlson. Marcus, what's up first?
Hi there, François. We're going to look at the financial fallout of the tensions in Ukraine first up. The crisis in Ukraine will seem to put stock markets under pressure this Thursday. The focus is very much on Russia, and it's been holding war games close to the Ukrainian border. The fear is that the crisis will take a more dangerous turn if Russia gets involved more actively. The two countries have close economic links, and observers say that instability in Ukraine is not in Russia's interest. Delana D'Souza takes a closer look now at their economic ties.
A country divided. In Crimea, pro-Russian supporters rally outside the regional parliament. They're demanding greater independence from Kiev. They'd rather look east to Russia. Economic links between the two countries are strong. Ukraine trades more with Russia than any other country. Exports to Russia stand at 25%, while Russia accounts for 32% of imports. The relationship extends beyond trade. Russian banks have around $28 billion of exposure to Ukraine. And according to a board member of Russia's Sberbank, it's in Russia's best interest to get Ukraine back on its feet.
Russian companies are major investors in Ukraine. Russia has every interest in keeping Ukraine peaceful and solvent and together. The most urgent need is keeping the day-to-day economy going.
Ukraine is also a transit country for Russia's #1 export. Pipelines from Russia transport gas through Ukraine to Europe. Russia has frozen its $15 billion bailout package pledged last year to Ukraine, but economic factors suggest it'll benefit from helping its neighbor out.
And staying with Ukraine, the International Monetary Fund is sending a team there to discuss financial aid. Ukraine's finance ministry says it needs $35 billion to avoid a default this year and the next. The IMF says that it is ready to respond, but the question is what conditions it will set in return. The fund has previously asked for the country to cut subsidies for natural gas to consumers, but Ukrainian officials, they have been reticent when it comes to that issue before. And as the Ukrainian issue is putting a dampener on stocks, investors, they're also digesting comments from Janet Yellen. The Federal Reserve Chair has been testifying to the U.S. Congress on the state of the world's biggest economy. It follows a series of underwhelming economic reports. Yellen told senators that unseasonably cold weather may have played a part in dampening consumption and the U.S. economy. She also signaled that jobless levels are still too high for the Fed to end its stimulus of the U.S. economy and raise interest rates. Let's listen in.
Who's out of a job more than 6 months continue to make up an unusually large fraction of the unemployed. And the number of people who are working part-time but would prefer a full-time job remains very high.
Let's take a look then at how the markets are faring this hour. In the United States, we are seeing stocks trading to the upside after Yellen's testimony, as it's still underway, I believe, over on Capitol Hill. The Dow Jones Industrial Average is up around about 0.15%. In Europe earlier, we saw stocks claw some of their previous losses back towards the end of trading market-wise. It's also interesting to note that Ukraine's currency, the hryvnia, continues to fall against the euro and the dollar. A little bit of a mixed picture, as you can see right here, with the FTSE 100 above the flat line, whereas the CAC was flat and the DAX over in Frankfurt lost some speed there. Taking a look at some individual company news, the Royal Bank of Scotland has unveiled plans to cut costs and streamline its business. It came as the British lender reported a whopper loss of £8.2 billion or 10.9 billion euros for 2013. RBS says it will focus on Britain rolling back its global ambitions. The bank was bailed out by British taxpayers back in 2008, and it is still 81% state-owned. RBS shares, they were down almost 8% at the close in London. Here in France, shares in nuclear company Areva plunged almost 14% this session. It comes after Areva reported a net loss for 2013 of almost €500 million. It was the third consecutive year in the red for the company. The firm says it's taken heavy charges for a contract to build a new reactor in Finland. And private equity firm Blackstone is buying a 20% stake in Versace. Overall, Blackstone is paying €210 million for new and existing shares. The deal values the Italian fashion house at around €1 billion. The Versace family says it will remain at the heart of the brand. That's the business news for now. I'll be back in around about an hour and a half with more business headlines. For now, though, back to Francois.
All right, many thanks, Marcus Carlson. Time now for sports. The